But joining us to put all of that in perspective is Peter McGuire from Exim Australia. Peter, hi, good to have you. So much happened over the weekend as you were traveling to Dubai.
Absolutely, Manisha. I tell you what, it's been a very, very interesting weekend, and to all the, the tragedy of war, we don't like seeing that at all, but it certainly adds much spice to the oil market, doesn't it?
Oh, absolutely. So what's your sense from now? I mean, as of now, it's all sentiment. It's a knee-jerk reaction. But what do you think can happen from here on? How are you reading these instances in markets and the statements coming in?
Well, I'm reading it a lot of ways. I mean, the US dollar's had a bounce to the upside. That's the first side. And you're looking at what's happening as far as Asia trade. It's been a choppy day for equities. But if you're looking at crude, I mean, it's just bounced strongly, nearly up 4.5%, 5%. So it's after last week's washout and then what's happened, I wouldn't be surprised to see further moves to the upside. A couple of reasons why. War premium, you always build in 5 to 10%. But the other side is it's only very early in this whole conflict. And if Iran is to be involved in this, and let's hope it isn't, but 17% to 20% of all oil flows through the Strait of Hormuz. And there could be geopolitical concerns as far as supply and how that would disrupt the global market, Manisha.
So, a very nearby precedent clearly has been the Russia-Ukraine conflict. And we did see the crude oil prices go all the way to $120. And then, of course, we've seen $70 happen in the month of June as well. So it continues to be volatile. Now, this is quite different from that. We haven't seen an immediate crude oil impact here. But as you said, whether it's about Iran or other countries, Saudi Arabia, Hormuz, all of that can create a lot of panic into the markets. Are we yet again talking about $100?
Well, it's probably early to call. I still believe it'll get there before the end of the year, but this could really spark things up and spark it up very quickly, considering you had that 12% washout last week. So it was just, smashed to the downside. Now it's bounced, and let's just see how New York trades and naturally how this issue, if it's resolved in a matter of days or if it's long and protracted, then that really creates much more turbulence to the volatility of the market. And I think it's too early to call, but I think it's, 100's probably very achievable.
Peter, for today, we've seen China come back from a week-long holidays. The US markets are shut today. They resume after the long weekend tomorrow. So are we looking at a weaker, weak volume day as we proceed into the US zone?
Well, probably are in some ways, Manisha. I mean, but I think that you'll probably see, the premium build in. We've seen it already, but the premium's got to be considered also with that US dollar strengthening. And I'm conscious as far as, the state's shut, but there's enough global probably participation to bid it up and bid it up strongly. So let's just see how Europe plays and naturally how the UAE and all of the Middle East play with this whole situation. And I think, it'd be a very interesting next 24 hours.
Oh, yes. So, Peter, there are two camps really right now. One that believes that this is far from over. Even the Israeli Prime Minister has said this is going to be a long and difficult war. But the other camp believes that they can't afford to have it too long. It's in everybody's interest to cut it short and make resolutions even come together. Reading into the geopolitics, what's your sense?
Well, I listened to Benjamin Netanyahu and, his rhetoric, and very much he said it's going to be long and protracted. So that probably puts more fear into the market, Manisha. And I think that's where if you're not listening to him, then I think you should be, because quite simply he's telling you what's planned and how it's going to play out. And I think it could take a matter of weeks before you start seeing some blue sky across that whole region. We'll just have to wait and see how it plays, but it could be very, very volatile.
And that just brings the point to fore yet again, as the Indian oil minister today said that this is the reason that we keep pushing about biofuel alliances globally. I mean, the dependence that we have on crude and the way the prices moves is just way too much. How would you read into that?
Well, this is the issue as far as, where crude, the majority of it is produced and how it comes to the market. And, the geopolitical hotspots associated with those regions, Manisha. So this is just the way of the oil market. And I think we've just got to, we come to terms with that. That's been the state of play for the last 50 or so years. And I don't see it changing anytime soon. And that creates, again, that volatile situation. It's a real powder keg. and you're always living on a little bit of a knife's edge as far as price.
Oh, yes. My final question then, Peter. You said 100 is a possibility, and that is something that we've heard across banks and brokerages. But if it corrects from here, which it did in the previous week, where do you see supports come in?
Well, it's got to be 75, Manisha, but I don't necessarily. I think that's you've got to get through this this current situation to see where we move from here, and that'd be probably the US dollar would come to some pressure, maybe to the downside. So I still believe, maybe high 70s, but it's too hard to call. I think every trade is looking at the upside at the moment, not necessarily the downside in the short term.